Seth Freeman joining us this morning. He is Senior Managing Director at Glass, Ratner Advisory and Capital. We also have Edward Yardeni with us, President Yardeni Research. Mr. Yardeni, I'm going to start with you, and thank you so much for your time to us. So there are two things, there are two tracks actually today of our conversation. One is, of course, the Fed, and the other is what Xi and Trump are likely to do. I'm going to start with the latter rather than the former. And, I want to understand what are the possible scenarios that emerge from the meeting and the pictures of the two leaders that we're seeing.
Well, it's very likely that there will be some sort of deal, but it's not going to be a trade treaty. It's not going to be something that they can both sign, in my opinion. It'll be a framework, perhaps. But the main point is, I think both sides want a truce. They want a ceasefire. They want to back off. I think the Chinese might postpone their restrictions on exporting their rare earths by perhaps a year. I think the Trump administration will back off on the 100% tariff threat that was suggested only a few days ago. So clearly, the attempt here will be to paper over the differences and to come to some sort of temporary truce and understanding.
The downside, of course, is that if nothing emerges and even a broad framework does not, so that is up in the air at this moment. What we do know is what the Fed has said. So, Seth, I'll bring you into this conversation. What did you make of it? Because it seems like the Fed chair is more worried about inflation expectations, which seem to be elevated at this point, despite the latest reading being soft. And the street is unhappy with the fact that there's unlikely to be a cut in December.
Well, he was clearly managing expectations, but further in the talk, he also mentioned that with the shutdown, the Fed may not have as clear data that they would like to have going forward. And this could impact their whole assessment of December, in December.
Okay. Said, but having said that, is there merit in the markets trying to think that there will be a higher probability of a pause in the December policy, or because of the QT withdrawals and the weakening labor market, there is a high probability that, and of course, Trump nominees on the Fed board now, there's a high probability that the rate cut path may continue?
We're in the restructuring business, and we're seeing a lot of problems in key industries, especially agriculture and core manufacturing. Sentiment is high because of AI and the huge gains there. But in our more basic aspects of our economy, it's not so well. And we're sort of at a neutral levels of employment growth. And all these things are going to be driving a decision in December.
Dr. Yardeni, if you were to list out at this juncture the biggest risks for the US market at this point, and then if you were to look at beyond that, the emerging markets, including India, and you were to perhaps add to that list, what would the top 4 or 5 be? Yeah,
I think the big issue right now for the U.S. economy, as my co-panelist mentioned, is the labor market. And the labor market has structural problems. It's not kind of short-term cyclical problems that the Fed can make go away just by lowering interest rates. On the supply side, we've got deportation. We've got severe restrictions on immigration. And on top of all that, we've got retiring baby boomers, many of them that worked past 65 and now in their 70s are starting to retire. And it's pretty hard to replace them with young, inexperienced workers. And instead, companies are basically putting a freeze on their payrolls and saying, let's not increase our payrolls for now until we assess the extent to which AI technologies can increase our productivity, so we don't have to increase our payrolls. So that at some point could weigh on the consumer, and that's a concern. The the good news is the retiring baby boomers have $80 trillion in net worth, and they seem to be intent on spending quite a bit of it. Maybe they'll leave something to their kids, but they're clearly spending a lot of money. And of course, on the technology side, there's a lot of spending. But there too, there's a risk, and that is that something will happen to convince the markets that maybe the so-called hyperscalers are spending too much money on increasing the capacity of data centers. And it turns out that the demand for AI computing isn't as robust as these companies are extrapolating. So, and as we know, there's a lot of circular financing going on, which brings back memories of 1999 when there was a lot of seller financing going on that created a tech bubble that burst, and that was followed by a tech wreck. On the international side, I would say that clearly an easier Fed policy is good for emerging markets. And now with the Fed announcing that they are, they're not sure what they're going to do next, but they may not, they're certainly not going to raise rates, but they may not lower them. That may create a little bit of issue for emerging markets, stock markets. But overall, the global economy is held up very well.
I actually want to come to you on exactly that point. The view for emerging markets with what Jerome Powell has said, and in light of, all of the confusion or uncertainty over a trade deal between US and China, what does the Indian market scenario and outlook look like for you? Mr. Yardeni.
Yeah, well, for me, the Indian economy has a lot going for it. Clearly, we all know the population is large. We know that the population is young. We know that there's a lot of highly educated people, and there's potential for a tremendous domestic demand. India doesn't depend as much on exports as China does, and so it's in some ways it's a more flexible economy that can certainly deal with some of the stresses and strains that are occurring geopolitically. But I think the outlook is all right. I think I think China and the United States are going to have some sort of agreement, and I think China and India, the U.S. and India will have a deal as well. And again, the global economy has done remarkably well in the face of these trade tensions. And if the tensions come down, the outlook is that the global economy should continue to do well, and that'll obviously benefit everybody. But I think particularly emerging market economies that are benefiting from companies moving out of China and to places like Vietnam, Indonesia, Malaysia, India, etc.
Yep. Okay. Gentlemen, both of you, thank you so much for taking the time out and giving us your thoughts and a view on the EMs as well.